Hey, good morning, everyone, and welcome to the PivotBoss Pre-Market Report for April 27th, 2016. I'm Frank Ochoa, aka PivotBoss, with analysis for the current session. Here's a look at the daily time frame of the ES. What's important about this is before what we talked about was that price was likely going to rally from 1800s perhaps back to the HVN at 2061. And once it gets to the HVN, we were going to look for signs that it was going to build and develop a range around it. After you see such expansion here in March, the tendency is to create a trading range after a price discovery phase, right? And so you can see a larger pivot range here indicated that we'd likely see some sort of trading range behavior. And when you anticipate that type of behavior and you start to see it play out on the bottom here, and then price pushes through the high and holds on a retest, the expectation would be that the 25% PivotBoss pivot, the R1 pivot, should be defended, and it was at 2102. And after that rotation, we've seen a push right back toward 2077.5, which is the top of the August key range. So you can see here this is the point in the chart where prices have had trouble establishing acceptance for periods of time, which has led to rotations lower, at least back to the 1995s. So for the most part, we could be looking for rotations back toward 1980, 1990, if prices fail to hold above 77.5 in general. That's just been what the market has done here lately. It's had an inability to hold above those zones, thus the reason we've seen rotations lower. And if that occurs, we could be finding the opposite edge of this trading range that could persist throughout May as we head into June, July, and perhaps an August dump. So, right now, the big level to watch is going to be 77s, obviously. This 2100s, and very important still, and remains resistance. Failure to hold above 77 could get a retest of 61s with a likely discovery phase below 2030 into this LVN, which could be an opportunity to defend and bring it back up. So we'll see how that plays out. So nothing super actionable with regards to the ES, but I just wanted to bring you along and show you some of the key levels I'm watching. If you look at the ES in the intraday time frame, it's mostly coiled up here. We've got quite a bit of divergence happening between the ES and the NQ, basically because of earnings. If you look at kind of a wider time frame here, 10,000 volume bar chart, you can see prices, for the most part, rejected off of 2100s, right? There's the 2100s. And then you can see we've seen a price discovery phase downward back toward 2071. At which point price attempted to hold below the key range low of 2074s and failed. This failed range expansion has led to the recent rally back toward 2091, and since then we've basically coiled in a tightly formed range. I think this coil right here will open up a significant breakout opportunity soon. We could be looking at significant expansion if price cannot hold the bottom here at 2077.5 or above 2091.5. Above here squeezes back toward 2105s. Below 2077.5 opens up a likely push back toward 2061s and the primary bear target for the week. Right now that's 2049. So that's kind of an idea of what's going on here and what potentially could happen. We have a very tightly compressed value area here, very tightly congested price action. Expansion could be seen soon, but be careful. Look to fade the edges until that happens because a lot of whipsaw activity could be seen first. So the first idea would likely be fading new highs, fading new lows until confirmed expansion outside of this range occurs. All right, let's take a look at the crude oil chart. Here's crude oil in the daily time frame. We've seen price push higher through 43.85, the top of the key range, and then come back, rotate into 42.60, defended at that HVN, and then pushed higher again into 45s. Yesterday, we thought, especially in the trading room, we thought that there was a great shot to see upside continuation and expansion into those higher price levels to new highs, and we saw it play out. Now we're seeing price hold those highs, at least initially, and test the 45s. So 45 is an important level short term, but I would say the major area to focus on right here would be 45.66 and 45.47. So given the current push higher here off of these lows, the expectation would be by the end of the week we test 45.47. That's the primary idea and the primary ADR bull target. Additionally, this is the 25% expansion target. From here up is the 25% expansion target, and typically speaking, that target could offer a short-term rotation. So price could continue drifting higher into these targets, and once it hits 45.66, we could see a minor rotation downward that could be defended right now. So far, all rotations, no matter what size, all rotations here, 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 this one, they've all been defended right now, and those have led to new highs to varying degrees. And those have all been present ever since we saw this failed range expansion day here. So continued strength should be seen ahead until proven otherwise, and right now, failure to hold that 42.60 would be a significant level to violate, and that would open up a return back toward 36.60. So for right now, buying the dips is still very viable. We could see further upside into 45.66. Now, if we take a look at the intraday time frame, this is what we mentioned the previous session. We failed to hold below the previous session's low here, bounced back up. On the PivotBoss bands, the third standard deviation band started to pinch right here. And at that point was when we mentioned that we could be seeing an expansion phase heading into the latter part of the session. Expansion began here, and then price saw a digestion phase on highs. And so after that occurred, you see the gap up in after hours trading and the initial push higher. This is the first pullback we're seeing right here in after hours trading back toward VWAP and the overnight pivot. We also have an LVN here separating the double distribution trend day that has played out so far. Typically speaking, in this type of day, you want to defend the LVN, defend value for a shot at highs. That could rotate you back into the 45.30 area, 45.32 being the 5-day, rather the 50% expansion target, and 45.78 being the primary target for the day. Failure to hold above the LVN auctions prices back below into 44.40 the low, and likely into a gap fill. So that's going to be your confirmation area that we could see a gap fill here. All right, let's take a look now at gold. The last time we talked about gold, really we talked about defending this level here. We talked about it on this day. After the expansion day and a push through highs, defend the level here and take it into 65 to 70. And then I mentioned if price reaches into 70 or beyond or above 65s here, look to reject it and fade it back downward toward 36.5. That's composite VPOC. And so far, that mini move up and then this move down has played out nicely. Again, we're right back in the center of the range, and it's a very tightly coiled range that's compressing toward the apex of that range, and that implies that congestion and whipsaws will continue to happen around this VPOC, but gold is gearing up for a major move, and it could be the Fed here. So the Fed's coming up later on this afternoon, the Fed statement, Fed funds announcement. That's going to be very, very important. The market could coil up ahead of that time. Watch gold very closely for signs of some sort of expansion from this range based on that event, and that could spark the next major move in this commodity. Any downside break and violation through the bottom of this key range here could imply a downward markdown phase toward that 1095 LVN. Meanwhile, any push and expansion through 1275 opens up the upside targets into perhaps as high as 1338 and 1341. So this could be a big time expansion phase, and again, all eyes perhaps are on the Fed. Looking at the NQ, what we were looking for, especially in the trading room here, was on this session right here, we were talking about it potentially being the high. So right here, I said this could be the high short term. And if it is the high, we need to close below the week's close, the previous week's close. And then here it is. That was the previous week's close at the time, and we closed below it. So then I told our trading room, since we closed below that level, remember the best part here, the best part to attempt to fade is prior rejection areas. So right in this area is a zone to fade. So if price comes into that area, look for prices to swing the opposite way and look to take out these lows, because that's been our MO the entire time. There is a key pivot right here that goes across the middle of this range, and we've seen a ripple effect play out around that pivot, taking out highs, taking out lows, right? And so that was the high of the week there. We were looking for that swing move down, and we've just accomplished it. So you can see the move below that low. We reached our goal right into 4400s. Very nice swing move, high probability, great entry. This is one of my favorite types of rejection and entry approaches, and it happened based off the ripple effect. So very nice. And now we have seen a big gap down. We had obviously the earnings come out after hours that helped influence price lower. This is going to be important because now after news and a big gap down, after running some stops down below, there is a 43.55 LVN down here, which is going to be a big time target to defend if you're a bull. But I would say that if prices push back above these overnight highs here, we could look at a gap fill very quickly and begin the journey back within the range. Because again, after a significant price discovery phase, which we endured for 2 months, the market likely trades sideways for a couple of months. And it's only been, 3.5 weeks or so. So we could see another push back up. So I'd be looking for any sort of trap down here to rotate this thing back up. If there's any failure to rotate back up here above 44.31, then again, 43.55 becomes your next level of interest down below. Looking at the intraday time frame, again, here's the intraday time frame. We have the big gap down, 44.53. You can see prices holding 44.14 is the overnight pivot, 44.14, right on the dot. That's also a key level here. And you can see gap down, right? And then rotation defended, rotation defended, rotation defended. What you need to start watching for are signs that new lows are being rejected or that higher lows are starting to form, at which point you're going to see pressure on this overnight pivot. And then what you want to see is once a rejection occurs and price pushes through our pivot here, when it comes back, look for this pivot to become support as price then marks up and fulfills these upside targets into the previous week's low and then the previous session's close. So you're looking for 44.31 and then 44.55 on the way up. So that's the approach right now. Any failure to regain acceptance back above 44.14 implies a continuation downward. And again, we have lower price levels into 43.55 to play toward. All right, that's it for now. Let's see how this thing plays out heading into the rest of the session and the rest of the week. Good luck and trade well.